countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Wednesday the 22nd, 30 minutes to the European close. What do you need to know out of Europe? Well, stocks bouncing, continuing to bounce, should I really say. Coming back from Monday's sell-off, China's Evergrande said it has resolved, whatever that means, a domestic bond payment. Clearly, we're now focusing on the Fed. That comes a little bit later. EU states sounding the alarm over surging gas prices as the impact spreads. CO2 shortages starting to spread out. Fertilizer plants throttling back production. And Presidents Macron and Biden will discuss the submarine spat in a call later today. Boris Johnson today mocking Paris, saying the French should get over it and move on. He did so in very bad French, which I think may have been deliberate. This is the move in the market that we're seeing right now. The Euro Stoxx 600 up by around 0.9%. The metals are on the front foot. We do, though, have natural gas just dipping back a little bit, but still very elevated prices. Alex.
Same here in the U.S. So Monday, you had a rally into the close. Yesterday, you had a sell-off into the close. Today, we're holding on to gains, up by 1 percentage point. You have the cyclicals that are leading the way. But I want to take a look at what will the wild cards be for the Fed? What might put the brakes on any kind of tapering? The one hand, you have China, for example, and I wanted to highlight that by dollar offshore yuan down 0.3%. You did have a yuan slide over the last couple of days as the Evergrande crisis really heated up, and now you're finding some stabilization as the PBOC also injects liquidity into the system. The other part are those pesky natural gas prices and the power prices, etc. You might be having a little bit of relief over in the UK, but here in the US, you're looking at natural gas futures still up by 0.6%. We're getting some power crunches here, despite the fact that we have fracking and a lot of supply. So that's still definitely the inflationary impulse. What's the impact on the 10-year yield? I mean, I want to make a big deal about this, but it's really hard to. The back end is definitely coming down a touch, but we're talking like 1 basis point here. The curve flattening a touch, around 100 basis points for the 530s. But it does feel like not a ton of movement into the Fed. What would be, though, sort of a dovish tilt or a hawkish hilt? That's what we're going to have to find out at 2 o'clock.
Tilt.
Tilt. You know, the hilt, like a belt.
The hilt of the tilt.
Sure.
I wonder, I'm looking at the Fed just wondering whether actually if they came out and were more hawkish, the market might take that as a positive rather than a negative sign. We think that this recovery is on rails. We're not going to worry about China. We're not going to worry about what's happening in the energy markets. We're not going to worry about what's happening with the fiscal story. That's the positive view. A Bloomberg survey of economists suggesting very much that the Fed is expected to formally announce tapering plans in November. So where do central banks stand globally on turning off the money taps? We've been talking to a few. This is what they had to say.
At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year.
Favorable financing conditions can be maintained with a moderately lower pace of net asset purchases under the Pandemic Emergency Purchase Program than in the previous 2 quarters.
We should also not ignore the risk of excessive inflation. Considering the existing uncertainty, we should not set in stone this very loose monetary policy stance for too long.
Alan Roskin, Deutsche Bank's chief international strategist, joining us now to give us his perspective on what we can expect from the Fed a little bit later on. Alan, what do you think we're going to learn today?
Well, the market's got this habit of distilling 2 days worth of conversation into about 2 minutes as they look at the dots. So I think, the focus is very much going to be on, does the median dot shift in 2022 to a hike? That would be a big deal because that would be the Fed effectively bringing forward rate hikes and maybe being even a little ahead of the market. 2023, there's, I think, actually quite a common expectation that they will lift up their median dots from 2 hikes, that's 2 25 basis point hikes, to perhaps 3 hikes. So I don't think that'd be a huge surprise, but that's a possibility there. And then we're going to learn an awful lot in 2024, really, in terms of, how many hikes and where's the point of normalization as far as rates are concerned, and how quickly are we going to get there?
Alan, you mentioned the 2022 bringing forward a hike. It wouldn't take that much of a change in the dot plot, just like 2 dots moving. So that doesn't feel like it'd be that much of a jump. What would be the repricing in the market for that?
Yeah, I don't think it's going to be a huge repricing. I think the market's actually quite split between the idea that the Fed keeps the 2023 dots, signaling 50 basis points, and people who think no, they probably have 3 hikes, 75 basis points. I don't think there's going to be much of a reaction. In fact, I think the real reaction will come if, for example, the 2022 dot shifted. I think that would be the big deal. The 2023 dot, if it just shifts by 25 basis points, I think the response is going to be pretty muted.
What would cause the Fed to be more cautious? There seems to be a long list right now, Alan. You've got what's happening in D.C. The odds of a default seems to be rising. We may get to that point, we may not. We've got what's happening with China. The data more broadly, though, have been slowing down, and I've been surprised that we haven't seen sort of dovish language accompanying that. So I'm kind of wondering what the risks look like on both sides. How do you see the downside risks, and do you think we're at the point now where the Fed can kind of continue with what it's doing and ignore them?
So I think there are, some of the risks that you mentioned. I wouldn't go too far on the default risk, but the China piece is intriguing, and the data is probably most relevant, particularly if there's further slowing in the employment data. So I think because of that, the Fed will keep some degree of optionality. I think there will be, we want to actually see the data before we respond. But I think the burden of responsibility, the burden of proof is on the data to prove that the Fed should not go and taper in November. I think that's, where they effectively lie on this issue.
Do you think that we're going to be in a world of central bank convergence or divergence? I personally feel like I shift every day on what that's going to be. There's confusion for the ECB as to what the PEP will evolve into and what it means for the asset purchase program, the traditional one. The BOE is also tomorrow. The market is pricing in 2 hikes for next year, which is confusing some. I mean, what are we going to be looking at?
Yeah, I think it is more a story of divergence than convergence, keeping in mind that we've really had very little action from certainly G10 central banks in the past year or so. So it's a low base to shift towards some level of divergence. At the same time, I think there's going to be an awful lot of focus as far as global markets are concerned in terms of what the Federal Reserve is going to be doing. And if there is a real divergence that people aren't talking about, it's really the pressure on China and Chinese policy to ease. So I think, if you're looking at real divergence where one central bank, a major central bank, is going to hike, and a major central bank might ease, I think it's the G2 axis, the Fed and China.
Alan, we're not talking about replacing Powell at the moment a great deal. How would the dynamic shift if we were to get an announcement that he's out and Brainard's in? How much of a recalibration would we need at that point?
Yeah, I think there's still an expectation of continuity if Brainard were to take over the helm. But Powell has been such an arc dove at this point that I think inevitably there would be a little bit of a swoon, a little bit of uncertainty. Uncertainty would translate into a risk-negative response. I think, keep in mind, for the last, 40 years, we've really just gone from someone who's been hawkish to less hawkish to less hawkish, and, effectively, to the most dovish Fed chair that we've had in the last 5, at least, central bankers, and, in Powell. So I think there would be a substantial rethink in terms of, okay, have we seen some slight change here? And I could see a very modest negative risk response.
Before we let you go, we got to get your take on the BOE, and I want to bring in what's happening with the UK power prices. We've seen multiple power companies have to go bankrupt. They can't serve their customers because of the power crisis. And I know as an economist, you're going to say, hey, it's transitory, so don't worry about it. But this could be a structural shift, and it fundamentally hurts households. They're going to have to pay more eventually. At the same time, you got the furlough program rolling off as well. How do you factor that in to your growth forecast and to what central banks have to do?
Yeah, I think they're in a real dilemma. So that's a classic supply-side shock, and it's very questionable whether central banks hiking into, what is almost all a supply shock is the appropriate response. I think, what you see in other countries, not least the United States, is there's a mix here in terms of inflation pressures. It's demand-related and it's supply-related. The market, I think, is anticipating a rate hike in the middle of next year. To me, I think it behooves caution on the part of the Bank of England not to move too rapidly here. Let this play out a little bit more. Obviously, if they see inflation expectations really on the rise in a material way, on a sustained way, looking further out, 2-3 years out, then they're pretty much forced to respond.
Alan, really good to catch up with you. It's going to be a fun day. Alan Ruskin of Deutsche Bank, thank you very much. And we're going to continue the talk on the spike in gas prices over in Europe and the UK. We're going to speak to James Waddell of Energy Aspects and how Russian gas is going to play into this next and when Russia could really deliver more gas through Nord Stream 2. This is Bloomberg.
You would expect normally that the price would revert to the mean. It's not something that we think is going to be sustainable. But of course, Mr. Jones, we have to prepare for longer-term high prices.
Kwasi Kwarteng speaking to MPs a little bit earlier on. He's updating Parliament basically on a daily basis as to what is happening here. Are we going to see sustained higher prices? James Waddell, Energy Aspects Senior Global Gas Analyst, joining us now to try and answer that question. The UK government may be making the argument that actually we all need to get used to higher gas prices. Is that your view of the world as well? Is that what we're going to have to learn to live with?
I think we are seeing to some extent that this is a structural issue in terms of higher gas prices and therefore higher power prices. We have to remember this is not just a UK phenomenon, this is across Europe. And part of that is because we don't expect to see balances really loosening that much over the course of next year. We do see a lot of extra Russian gas coming in, but still not fully resetting the balance. And also because competing fuels in Europe are still priced very high. So the coal price, for example, where gas competes strongly in the power sector, is staying high. So that should just keep prices for gas generally in the wholesale market high over the course of 2022.
Hey, James, what's preventing Russian gas from getting to Europe?
So this year we've had a big increase in Russian production, but you've got to look at where that gas has actually been going. Now, Russia is a gas market which is almost the same size as that of the entire European Union. And there was a very heavy stock draw last year in Russia over the last winter, which led to a very big stock build in Russia this year. So a lot of that extra production is actually going into the Russian balance rather than going to Europe. And then a bit extra has been going to China, and a lot extra has been going to Turkey. So actually, year on year, we've actually got very little increase in Russian gas, and we're about 17% down on a pre-pandemic level.
So those that make the arguments that Russia is holding back gas to try and accelerate the certification of Nord Stream 2, they're off the mark, right?
I think it's not entirely invalid. I think there are these upstream constraints that are affecting, to some extent, the amount of gas that Russia can ship this year. But a lot of it depends on how much gas they wanted to invest in over the course of the last 12, 15 months. And of course, last year was very difficult in terms of COVID for an investment point of view. So Gazprom will be wanting to increase production, and it does probably have the capacity to increase production. And it is making the argument that if you give us Nord Stream 2, we will give you more gas. So I think it is playing into Russian calculations to some extent. But I think this year it's more constraint-driven than anything else.
Where's all the switching happening? Like what, you mentioned coal being expensive, but what other products, what other forms of energy are going to see a price spike further because of this?
So what we're seeing generally is that gas has been driven out of the power sector and is being replaced by coal in the European power sector, as we don't have really enough gas to put into that power sector and also supply industry and the domestic market and the residential and homes and businesses. So we've seen that displacement, and now we're getting to a price point in gas where we're having to ask essentially oil products, liquids, to step in and start generating to an extent that they haven't done in many, many years. So this will have a knock-on effect on oil markets and products markets.
In terms of what this does to wind power, in terms of what this does to solar, they look more cost competitive as a result of this. Ultimately, does this end up accelerating the transition? Is that what will likely be the net result from this? Coal and other kind of available sources of calories are going to step in the near term, but sort of medium term, does this accelerate the energy transition to wind, to solar, and to potentially more nuclear?
That's exactly right, although I would question a little bit the idea of having more nuclear, because I mean the trend in Europe has been to be closing down those nuclear sites. We're looking at Germany, where we're going to lose 4 gigawatts of nuclear capacity at the end of this year, and then the further 4 gigawatts of nuclear generation at the end of next year. We're also closing down a lot of coal-fired generation. So although we are increasing the case for renewable build-out, it is taking time, and that renewable build-out is having to step in to replace the closure of nuclear power and coal power, and then it is only after doing that that it will start to replace gas-fired generation. So this dependence on gas, and particularly gas from Russia, is going to be with us for some time.
So the cure for high prices is usually high prices, because at some point you got to divert the flows if you need it, and you're going to have higher prices to do that. Same thing with products. Where are we seeing the biggest dislocations, / where do we need to see the biggest dislocations?
Well, we are starting to see areas of demand that are normally fairly unresponsive to prices, or they're not normally called on to reduce demand. Generally speaking, we will put gas into or out of the power sector in order to balance the European grid. Now we're looking at aspects of industry where, for example, fertilizer plants are not operating in Europe because it's cheaper to import ammonia than to produce gas within the continent. I've talked about gas to liquid switching in the power sector. Any sort of industry where you can't really pass through those high gas costs into your price list is eventually going to be a demand response, and it's at very high levels that we're starting to see that happening.
All right, James, thanks a lot. Really appreciate it. James Waddell, Energy Aspects Senior Global Gas Analyst. And Guy, that sort of is the point that I think we've been trying to make for the last couple of weeks, is that this isn't going to be a quick fix. So you can look at it as an inflation demand / supply pull kind of thing. But in reality, this is a big shift in the market, and that will at some point affect central bankers' thinking. It has to.
If it is structural, absolutely. Yeah, if this is a step change, ultimately, if we are stepping up to a higher gas price and we stay there, obviously the base effect makes that less inflationary at some point. But nevertheless, I think the bigger question here is the drag on growth, as you say. That's the real issue right now. For the time being, consumers are going to be protected from it, industry less so. So you're going to have to see a really big shift in behavior. You're going to have to see a shift in investment. If we are going to have higher gas prices, I don't think we're even in the kind of foothills yet of really understanding the implications of that if we are going to see that step change.
Yeah, I mean, you just heard what James was saying, that it's cheaper now to import ammonia than to make it because of the feedstock. I mean, that is an extremely inefficient market.
Yeah, but then you have a massive CO2 problem, which is much less transportable. You then have a problem with kind of other aspects of the supply chain. It continues to ripple, but the price effect is going to be absolutely massive, and in theory it should sort of accelerate the shift towards the to the energy transition, but quickly enough, probably not.
Winter is coming, Guy. Okay, let's get to this breaking news here. President Biden is holding a virtual COVID-19 summit. So here are some of the headlines. The U.S. is going to buy another 500 million doses to donate to the world. They're also launching a U.S.-EU vaccine partnership, and the donation will come with no strings attached, and that they fight fight the disinformation on vaccines. So not partnering on submarines, but partnering when it comes to vaccines. This is Bloomberg.
Is predictable and coordinated. In fact, an important part of the reason the United States is able to make these big historic donations is because we've worked with the U.S. vaccine manufacturers to accelerate the manufacturing rate and production. And now we're working quickly.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Evergrande said a payment due on a yuan bond has been resolved by talks without specifying how much would be paid or when. The filing triggered speculation it struck a deal to delay payments without having to call it a default. The People's Bank of China injected nearly $14 billion of short-term cash into the financial system, helping steady risk assets beyond the world's second largest economy. The European Central Bank will discuss boosting its regular asset purchases once the pandemic-era emergency stimulus ends, but any increase is uncertain, according to a governing council member. While the euro area's recovery should allow the ECB to end its $2.2 trillion pandemic bond buying program in March, officials are set to discuss how to avoid derailing the rebound when support is pulled back. And UK Prime Minister Boris Johnson has told France it's time to get over its anger about being brushed aside as the US and Britain cut a deal to supply Australia with nuclear submarines.
I just think it's time for some of our dearest friends around the world to, prenez un grip about all this, and donnez-moi un break, because this is fundamentally a great step forward for global security.
The UK is said to be looking at joining the USMCA free trade agreement between the US, Mexico and Canada. Biden indicated there's no prospect of a bilateral trade deal between the UK and the US anytime soon. And that is your latest business flash. Guy, Alex?
There's even greater video now, Alex, of this amazing handshake between Boris Johnson and Nancy Pelosi, which just never seems to end. Boris Johnson is having quite the trip to the United States. I'm not sure how the French are going to react to what he had to say. Boris speaks quite good French. In fact, he speaks very good French. So he's obviously trying to wind Paris up in a fairly significant way, which probably tells me that with the meeting with the president there went okay. Yeah, and we were talking about this earlier, too. First of all, it actually sounds rude when he says it, especially the way he says the French words. But putting that aside for a second, they had the submarine deal. So that was a big win. Now, apparently, we can import lamb from the UK, so, that's a win. Yep. No trade deal, though. It feels like a Hail Mary, the USMCA that now the UK wants to join, which makes no sense. But it does feel like it's definitely stick it to the French thing, because if you're French, that was pretty offensive, I'm thinking. Yeah. Boris has a long history of that, to a certain extent. We should bear in mind his newspaper days. So we've left one large trading bloc that is quite close to us. We're potentially looking to join another one which is a little bit further away. I wonder if Boris Johnson is considering a referendum on such a move. Anyway, talking of the French, I spoke to Guillaume Faury at Airbus a little bit earlier on. This is Bloomberg. So another day higher for European stocks. The Wednesday session turning out to be quite positive, following the Monday swoon, of course, which we must bear in mind. In terms of where we're seeing positive price reaction, the FTSE is up by 1.5% nearly. The miners are on the front foot. We'll talk about Antofagasta fags a little bit later. The CAC Iran's up by 1.2%. The DAX lagging. It's only up by 0.9%. So a positive session. Let's take a look at how the session has been progressing. We're obviously waiting for the Fed. We got some positive news on Evergrande overnight, so that seems to have provided the fill-up that maybe the market was looking for. And we've kind of tracked higher throughout most of the day. A little bit more positive trajectory to the upside, maybe being led by what's happening ahead of the Fed. So we're up by around 1%, 463 back into the middle of the older range. Wonder if we'll track back towards the sort of the 470s. In terms of what we're seeing, clearly the commodities market, as I've indicated, are having an effect. We are seeing the miners on the front foot. Iron ore's up very strongly on the back of the China story. They've injected some liquidity there. Are we going to get a triple R cut? I think is what a lot of people are waiting to find out. We're up by 2.31%. The translation from gas into the Brent price, not direct today, because gas in the UK is actually tracking a little bit lower, but Brent is being driven by a number of factors at the moment. We are, though, I think, looking at that gas to oil transition having an effect. We were hearing the Nigerians talking about 10% earlier in terms of the impact from gas into oil. Someone suggesting 5%, as we were hearing from Jeff Curry a little bit earlier on. So there is clearly a translation effect there. In terms of the way we're breaking things down, let's take a look at the sector rotation and what we're getting. As I say, banks, miners, travel and leisure, the main areas we're seeing some pickup today. The banks got battered Monday. We're certainly seeing money flowing back into that sector. The basic resources story being driven, as I say, by what we're seeing in the metals price area. Travel and leisure, Entain, I'll show you what's happening there. The DraftKings bid certainly continuing to drive that stock higher. Bottom end of the market's the safer end, so we're rotating back in to the more riskier end of the market. Healthcare, utilities, real estate, where we're seeing the weakness. So let's show you what the price story is in the single stocks. Entain up by another 6% today, nearly. Remember, we got the bid around this time yesterday, the bid news around this time yesterday, which drove the stock up kind of significantly, teens. We're talking yesterday in terms of the percentage gains we saw today. We are adding to that. Antofagasta is up today. Now, there's the broader mining story, which I think is interesting, but there's also kind of a little bit of gossip floating around the market about M&A stories on Antofagasta. As I say, I think it's as I think it's been described on one website as uncorked, i.e. we don't know yet whether or not there's any reality to this. This is just market gossip at this point. But Antofagasta seems to have reacted quite sharply to it, which I'm surprised about. But there's certainly been a spike over the last hour or so on the back of that. And Deutsche Post down by 1.73%, a reaction there to FedEx. Let's stay with the transportation arena. Earlier on, I got the opportunity to catch up with Guillaume Faury, the Airbus CEO. Airbus today have had a sustainability event. The reason why they're having it, unsurprisingly, we're waiting to see exactly what's going to come out of COP26. And a number of different industries are having these kind of sustainability events at the moment, basically trying to make their case for what is happening. Now, Airbus is trying to transition, and it's talking about this quite positively, to a hydrogen future. This is going to be a short-haul narrative, not a long-haul narrative at the moment, but the short-haul story could transition to hydrogen by 2035. They are apparently on track to deliver an aircraft at that point. In fact, Guillaume Faury saying today that he felt more confident that that could happen. Let's catch up with the conversation that we had.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen, and that's why we have the summit to create that momentum and make sure we have the right level of collaboration to make it happen on time.
What problems do you still need to solve? What needs fixing? And what kind of aircraft should we be thinking about? Is this kind of a turboprop-sized aircraft, a smaller aircraft, or are we thinking about a replacement for the A320 family?
The technology needs to be introduced in planes, in aviation, so we need to be able to deliver the fuel at the airport, to use the plane on board, to store it, to burn it or to use it in a fuel cell. There's a lot at stake at the moment. We are looking at those technologies, so it's not really about solving problems. It's about understanding the way we can use the different technologies and then selecting the right ones. When it comes to the planes themselves, hydrogen has different characteristics compared to kerosene. There is a higher weight density of hydrogen compared to kerosene, so it's good from the weight standpoint, but it takes more volume for the same quantity of energy. So the planes will have probably a different shape, a different architecture, and we will use less hydrogen in terms of weight, less hydrogen on board than with kerosene. So we believe we're going to start with short and mid-range aircraft before it goes to longer distances. So rather smaller airplanes at the beginning, which is also something reasonable to consider when you look at the investment that will be required. So smaller investment for smaller planes, easier go-to-market, and more convenient when it comes to the use of hydrogen.
Guillaume, we were just chatting about the North Atlantic and figuring out exactly what kind of impacts President Biden's decision to reopen the North Atlantic is going to have. What is your perspective on this? When do you think that we're going to start seeing the reopening translating into new orders, new wide-body orders for Airbus?
You make a very good connection between the reopening of the North Atlantic and the wide-body situation. Actually, what we see at the moment is a recovery on domestic flights or regional flights, and therefore the production increase at Airbus on the narrow bodies, on the single-aisle business, the A320 family, but we're still at a very low pace when it comes to wide bodies. It's the beginning of a process. I hope that the reopening of the North Atlantic will trigger other positive news when it comes to long-distance flights. But it's a bit premature, so we are very happy to see this first milestone. That was the most important one and probably the easier to get on the long distance situation. So very good news for the industry. We need to get it right. I think this is going to be okay. It's very important for the US and European airlines. Will very much help in general in the path to recovery. So we are very happy with it.
Guillaume, some in the market are starting to believe that you will easily beat your 600 delivery target for this year. I'm wondering, though, whether actually supply chain issues could end up having quite a negative impact. What are you seeing in the supply chain right now? Any chip shortages, any material shortages? What do you think the energy crisis in Europe is going to mean? Do you think you're going to have any impact from that?
Actually, we continue to operate in a very challenging, complex and unpredictable environment. We've delivered roughly 300 planes in the first half, so 600 for the full year is something that really makes sense from our perspective. The supply chain situation is challenging. They're really in a difficult spot, as I said earlier. We're working very closely with the supply chain. We're happy of what has been achieved in the last 18 months against the backdrop of this incredible crisis, but now that we start to ramp up, we see some difficulties. Our suppliers have challenges in accessing raw material, including on the prices of raw material, to reopen plants, to rehire or hire people for the ramp up. In this challenging situation, it's not easy. And we are prudent when it comes to the speed of recovery of our production. So again, we believe the 600 target we have given to ourselves is a realistic one.
Guillaume Faury, the Airbus CEO, speaking to me a little bit earlier on today from the Sustainability Summit the company's been holding, bringing together a number of different stakeholders within the industry. Alex, hydrogen planes, you happy with that? It's got a checkered history when it comes to the aviation story. But Airbus seems to think 2035, we could be getting on them.
I just really wonder who at the end pays for that. And I think that that's the conversation kind of no matter where you are in the energy transition. But like you mentioned in the interview, like you have to do entirely new planes. It's not like you just can like put in wind power versus, you know, gas, for example. But and that's a huge cost. And I just wonder who's going to wind up shouldering that. Plus, you actually have to have the technology to make it work.
Yeah, they sound more confident on the technology, which I think is a huge step forward. Some of this clearly hasn't been decided. They do have a history of working with hydrogen. We send rockets into space using the stuff. Mm-hmm. But as you say, new architecture for the aircraft. I think long haul will be more traditional for quite some time, but we'll probably swap out kind of traditional kerosene for more sustainable jet fuels. But again, that's something that isn't fully solved yet. We don't have the supplies we necessarily need. I don't think you actually answered my question on getting on a hydrogen plane, though.
Oh, I get on a hydrogen plane.
Okay.
No, I'm not scared of planes. I'm scared of space. Totally different. Like, I don't want to go into space and feel like I'm in never-ending space and have panic attacks. But like me on plane, totally fine on planes. Hydrogen, sustainable aviation fuel. I'm all good. The Concorde would have been dicey for me. All right, well, coming up, equity returns of Canada's second largest pension manager taking a hit because of the fact that it was light on some tech names at the start of the pandemic, missing out on some of that rally. So how are they correcting for that now? Plus, you still have systemically low yields. What do you do need to make a return? It's an exclusive interview with Charles Aymon, Caisse de Dépôt CEO, coming up next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Rishika Gupta, and you're looking at a live shot of the principal room. Coming up, former Fed Reserve Vice Chairman Alan Blinder. That's at 1:30 p.m. New York, 6:30 p.m. in London. This is Bloomberg.
Inflation is on the minds of the Federal Reserve as well as fund managers across the world, especially those who hold the future of employees' pension funds in their hands. So yesterday we spoke to CalPERS interim CIO about how he thinks about inflation.
It's a great question and something certainly that we're spending a lot of time looking on. I would say that in general, we probably resonate that it's transitory in some way, although probably, it has been, kind of staying higher than I think we would have thought early on, and frankly, than, many of the Fed watchers would have thought early on. That said, certainly inflation is an important topic. It affects the liabilities as well as it affects, the assets, certainly. It's one of the reasons why we have put some of the defensive positioning into the portfolio that we have. But certainly inflation is something that we're watching closely.
Let's get now another perspective. Caisse de Dépôt manages $304 billion in pension money for the Quebec government, and its CEO, Charles Desmonts, joins us now for an exclusive. Charles, thank you so much for joining us in studio. It's a real pleasure.
Thank you for having me.
So inflation is something that everyone has to contend with. The higher inflation, potentially weaker growth, a lower neutral rate from the Fed. You still have to make returns.
Yep.
How much risk do you feel like you have to take on? How do you calibrate?
Well, it's obviously a very important question. Inflation is something we haven't had in many years, so we have to learn again to deal with it. We've repositioned the portfolio in some areas that we feel are inflation protected, but clearly our call is that inflation is going to remain transitory or temporary. But that being said, we have to acknowledge that it's persistent. It's permeating into more industries and sectors than we thought, and so we see that actually fading in the course of 2022, but it is something that we need to monitor extremely closely.
Fading to a higher level than pre-pandemic?
Well, our forecast for the U.S. is that inflation will actually reach about 2.9%. So from an historical standpoint, it is important, but we see it coming down, and hopefully we see also a reason whereby supply is going to start adjusting accordingly. There's a lot of supply disruption right now, a lot of bottlenecks in many subsectors, and that's the main reason. And hopefully the demand will also actually reduce at some point, so we'll find that equilibrium. But certainly we see inflation subsiding in the second course of 2022.
Which leads us to sort of where you put your capital. I mentioned tech earlier, and you were underinvested in tech going into the pandemic. Obviously, that was like the big safety trade. You're upping your tech portfolio now, but still less than your peers. How do you do it and not overpay at the same time?
It's an important consideration. Technology, just to give you an example, we have about 70 billion Canadian dollar invested in the portfolio across all the various stages, so from venture capital, pre-IPO, growth, and even mature technology. So we're really catching up on that front. What we like is actually B2B, software as a service type of companies. It actually fits well for our investment risk profile. They have recurring revenues, which actually prove they have a business model that actually really responds to client and corporate needs. So that is really an angle. So we tackle technology in a way where it would be in the lower end of the risk spectrum to actually fit with our investment profile.
In terms of how we should think about tech right now, if you take a look at a lot of people's portfolios that have tech in them, what we have seen is effectively a huge increase in duration. Tech generally is a long duration trade. People have moved out as well in terms of what they wanted to where they're taking risk within the fixed income market. We see that both in the credit markets and in the govie market. Have you seen a similar thing? Is your portfolio now a longer duration portfolio? And if so, how much interest rate risk do you think you are currently carrying?
Well, there is a real important question in what you're saying. We only manage the assets of our depositors. They take care of the liability, but we also have that dialogue openly with them. And I would say if you look, for example, at our fixed income, we have more of a short duration positioning right now. It's actually paid off in the last few months. And with the central bank's normalization maybe starting to kick in the later stage of the year in 2022, we feel that'll be an important positioning in our strategy. But you're right. I mean, we've got to be careful. And there's been kind of a shift in the market lately, and you got to be careful. In a higher rate, inflationary type environment, you got to be careful in that duration risk. That being said, longer term, we try to match and extend some sort of duration, to have a level of duration that is reasonable to actually meet the needs of our depositors.
You also have another mandate, not just returns, but also part of the agenda is investing in Quebec's economy. Overall, Canada is really heavy on oil sands as well as oil, but in the middle of the energy transition and ESG, those investments are difficult to stomach for an investor if they need to go show their ESG credentials to their base. How do you manage that?
Well, I think whether it's for the oil and gas industry or any other sector, the transition is underway, so you got to get up with the program, and everybody needs to actually make that pivot. And I think there's tremendous amount of capital for any leader in a sector or an industry that is serious about transition. And so it varies. We see some companies that are really ahead of the pack on that front, and from our standpoint, we feel that actually focusing on transitioning the real economy and helping those sectors actually get to the transition and a low carbon future is quite important. So, as I said, there's good players and bad players, but the reality is every sector presents opportunities from that perspective.
Can we just dig into that a little bit more, Charles? Do you invest in companies that have to make the transition, or do you invest in companies that don't have the legacy of hydrocarbons, et cetera, associated with them, i.e. a cleaner, pure play, new energy companies? How do you think about that mix? Because a lot of companies are trying to make the energy transition from the legacy assets. As an investor, do you want to look there, or do you want to look at the cleaner plays?
I think you have to look at both. I think if you look at our climate strategy, what have we done in the last 4 years? And we pioneered on that front. You got to look at reducing your carbon intensity in the entire portfolio. So we've done that. Our target was to go and reduce carbon intensity by 25% by 2025. We are 38%, and we're going to renew our ambition. You got to buy the clean stuff, the green assets, and it represents now 10% of our portfolio. These are zero emission assets. And if you look at the entire portfolio that we have, the 400 billion Canadian, 3/4 is zero to low emission assets. And that is important. Now, what does that mean? It means that in order to actually reach net zero by 2050, you also have to go into some higher emission sectors and to help them transition accordingly, because that's what's going to be moving the needle for us as a society collectively. So it's important to actually play on all these fronts. If you look at it, renewables, if you just think for 1 second what goes into a turbine, what is it? You've got steel, you've got cement, you've got plastic, you've got copper. So even if you do renewable transactions, unless we make all these inputs or other sectors greener, we're not going to reach a net zero future by 2050. So we got to play on all fronts.
One more quick question on that. What kind of return profile do you see in the renewables? And I ask because oil companies like Total have made the transition. Some say that they're looking at the same kind of returns as their oil and gas business. What do you see?
We're actually seeing much stronger performance in the renewable space right now, that's for sure. Now, that being said, and often we lose sight of that, ESG can be quite inflationary. So in terms of existing renewable assets, you'll have to pay pretty high value these days. There's also a way to develop new assets where you get actually a better return, risk-return proposition as an investor. So from that perspective, you got to be careful. And there's other areas where if you actually move those companies into legacy sectors and help them transition, not only there's a good delta of alpha improvement and returns to generate, but you also do what's right for the economy. So again, it's a combination where we see values that are extremely high in certain sectors, and we've got to stay disciplined. Otherwise, this will create another bubble, and nobody needs that.
Yep. Charles, thank you very much indeed for your time today. Really appreciate you dropping by. Caisse de dépôt CEO, Charles Imon. Thank you very much. Okay, let's get back to the markets. We're waiting for the Fed. What does the price action look like? Abigail Doolittle, over to you.
Well, Guy, we are looking at the best day for the S&P 500, at least the last time I looked, since July. Let's start out with what's not working, though. And first up, Facebook, down 3.8%. Its worst day since July. This after saying that Apple's new ad policy is going to drag on growth. In fact, in the third quarter results, so you can see those shares lower. FedEx, though, the really big down story on the day, down 8.1%. Its worst day since March of 2020. This, of course, after they missed profit estimates, rising costs, that inflation story, Also, the profit outlook weighed on, having to do with labor. So if you see wage inflation at some point, that could really be a dangerous issue, and especially for the Fed to tackle. And you can see UPS down in sympathy. As for what is working, pretty much everything else. If we take a look at ConocoPhillips, up 4.9%. That energy sector really on fire, in sympathy with oil investors, traders, really positive about the economy. You see Freeport-McMoRan, the miner, up nearly 5% as well, in line with copper, up about 3%. So that demand picture, traders have a more constructive view today. And then finally, the banks are higher too. Yields are basically flat, but there's a big rebound rally for everything reopening and reflationary.
All right, good stuff. Abigail, thanks a lot setting us up. The Fed just about 2 hours away. Bloomberg's international economics and policy correspondent Michael McKee is back. All right, Mike, let's set the stage.
Well, we can show you the issue for Jay Powell and the Fed in one chart. It's the Atlanta Fed GDP and the latest inflation numbers, the PCE numbers that the Fed follows. The growth numbers are falling while the inflation numbers are rising. So where do they fit in there? Do they keep stimulating to try to bring up growth, or do they cut back a little bit to try to bring down inflation? That's the dilemma for Powell and company.
We look forward to the coverage a little bit later on. Mike, you going to give me a quick kind of heads up on the question you're going to try and ask?
Well, we'll certainly ask what the confidence level they have is that inflation will be transitory. It's been faster and farther than they had anticipated. They need to upgrade that. And they need to decide whether they're going to hint at a taper coming up later in the year. We'll also ask about the idea of conflict of interest with some of those guys trading.
Yeah. I wonder how many more press conferences Powell's got. The succession story, I think, is quite interesting as well. We will find out. Maybe we'll get an announcement from the White House on that fairly soon as well. Mike, looking forward to the coverage, looking forward to our broader coverage as well on that Fed decision. Got a simulcast coming up, radio, TV, starts at 1:30 p.m. in New York, 6:30 p.m. here in London. That's just one of the main events. Obviously, we're watching. We've got the CDC meeting coming up. Booster shots, day one. President Biden is going to be meeting with members of Congress today, trying to pull his own party together, Alex.
Yep, and we got a ton of central bank decisions tomorrow as well. England, Switzerland, Norway, Turkey, and some manufacturing data as well. And you got earnings from Nike. But really, quite frankly, Mike's question is like heralded as like the turn-up question at the Fed. Like he gets emails from like viewers being like, yours is always the best question. The Fed people like him. I'm just saying, just let's keep that in mind when we're watching the special. All right.
It's going to be exciting.
Go. Okay, I'm good now.
Yeah, it's going to be very exciting. Balance of Power coming up. Special presidential envoy on climate change, John Kerry, joining the team. Looking forward to that. This is Bloomberg.